this a little bit more with Bloomberg's Equities reporter Stephanie Hughes. Stephanie, what is SSR saying about its production of gold? Why could they fall short?
Hey, Marilla. Yeah, so basically with SSR mining, those shares fell as much as, by over 9% today, which was its biggest intraday drop since November. And like you alluded to, the precious metals miner delivered a production update that fell short of what analysts were expecting. So for 2025, they're now expecting a range of between 410 and 480,000 ounces of gold equivalent. On top of that, they also added that their all-in sustaining costs were higher than what analysts initially modeled. So to keep that all short, basically, SSR Mining is communicating that it's going to cost them more money to mine for a smaller amount of gold. On top of that, we also have the overhang of uncertainty around the Kopler mine in Turkey, which has been closed since its disaster last year, just over a year ago at this point. So this isn't what analysts and investors were hoping to hear with this update today, and that's what you're really seeing reflected in the share price today. And as we see in a risk-off environment, usually it takes something for a miner to be in the red today, and that could come from an earnings or production miss. Today, with SSR Mining, it looks like they're just extracting or expected to extract less from their mines than initially expected.
Okay, you're also keeping an eye on K92 mining. It landed on the list of top performers, TSX. What is pushing it?
That's right, Marilla. So speaking of risk-off environment, K92 mining, those shares are up by over 4% at its highest point today. It was one of the top performers on the TSX. It might even be on track to close at an all-time high if it can keep up the gains. And it's a gold story, just basically putting it simply. So gold hit a new record at over $3,100 an ounce, ahead of U.S. President Trump's tariffs that are expected to be put in place on Wednesday. So that's getting traders more anxious about economic uncertainties and having them flock towards safe haven assets. You're really seeing that play out, too, in the ETF space with ETFs that are backed by physical gold or gold companies. So some commodities analysts in the major banks in the U.S. say that they actually expect that this they expect gold prices to keep grinding higher, with their targets now ranging between $3,300 to $3,400 this year. So the gold train is going to keep going, according to them. So K92 Mining is not the only TSX-listed gold miner that's moving higher today. We also had New Gold, Torex Gold, Aya Gold and Silver, and a few others. So it's been a day to run to where it's safe, Marilla.
Yeah, we didn't know or hadn't really anticipated it going that high so fast. I think 3,000 was kind of a big reach, and then blew past that. Bloomberg's Equities reporter Stephanie Hughes, thank you.